Hi everyone, friends, followers of MIDF Conversations, ladies and gentlemen. So welcome to the latest edition of MIDF Conversations, where we bring to you for your viewing pleasure at this Thursday lunchtime, in direct to your mobile phone and laptop screen. So we've had in the past captains of industry, thought leaders, leaders of civil society, interesting people who are pushing the envelope, and today we are happy to host two gentlemen, and if I can just very briefly mention their names, Adrian Yap and Naysan Munusamy. These are the co-founders of an up-and-coming fintech, a homegrown Malaysian-owned company, which has been challenging norms and making waves in the industry. You just watched the videos for MoneyMatch, so if I can call Adrian and Naysan, welcome to the show, and thank you for being here. Just very quickly to introduce our audience to you as well, so you know who is in front of us, in front of the computer screens. We have with us CEOs, entrepreneurs, business and finance professionals, people from representatives from the media. We have university students, of course, my colleagues from MIDF and friends from all over, and investors, fund managers. I think a lot of people are interested to hear what you have to say. So again, happy Thursday and welcome.
Thanks a lot.
And maybe just to start, because I see we all got the memo about wearing pink, and this really is in celebration of International Women's Day, which fell a couple of days ago on Tuesday. And I think and this is recognizing and celebrating the great advances that we have made as a society, you know, in addressing the gender gap. So actually, you know, just to start off, maybe if I could ask you, Adrian and Naysan, both, just, you know, give me some quick thoughts on how you see that all of us, you know, all of us, not just the men, but all of us, how we can help our sisters, our wives, our mothers, our daughters, and all of our friends to find their rightful place in society.
Wow.
To you, yeah.
Big question to start off first. First of all, Farooq, thank you very much for the invitation. Thank you very much, MIDF, for inviting both Adrian and myself to this Conversations webinar. Really excited about it. We don't see ourselves as captains of industries of any kind. Still very much young guys starting out. We are very much the fintech guys. We've been doing this for quite a few years now. So I guess I will start off a little bit, just a quick background for the viewers over here, a bit about MoneyMatch. So we are a fintech startup over here in Malaysia. We got into the Bank Negara Malaysia fintech sandbox all the way back in 2017. Subsequently, we graduated with a full license in 2019, with the first being eKYC into the country. And right now, today, we are one of the largest B2B cross-border payment service providers here in Malaysia. We also provide individual remittances and also services to and solutions to even banks and other FIs as well. So to answer your question a bit, I think that I'll start off with a statement saying that I think that let us not skip around the bush by saying that women in financial services are generally underrepresented. To be very honest, not just talking about the board or director level per se, but just generally, if you just look and saying that the top management or senior management of the majority of banks or FIs, fintechs as well, generally speaking, because most of our talent usually comes from the banks or some of the big fours and whatnot as well. So generally speaking, yes, there is a clear gap there at the moment, right? So I think that for us, basically being guys in running businesses and whatnot, the best way that we can contribute basically is kind of like proactively looking towards ensuring that there is a great amount of diversity and inclusion in our company. So I think that, like, I'll be very honest with you guys, if we just like ran our normal hiring path, MoneyMatch will probably be like, 80-90% boys, right? That is generally, the kind of like talent pool that comes in from the other banks and the other financial industry as well. So we do go out of our way as well to ensure that, we don't end up as an all boys team. And we do have over like 40% or so female representation in our company as well. Still not enough. We still need to hit the 50% mark. But it's something that we actually have to proactively do. I don't think that's actually I don't think that's a great thing. Unfortunately, it's something that we have to do in order to give more fair representation of women in finance. Because if we don't give them more and more jobs per se, how are they themselves going to become seniors and move on and become candidates of their industry in their own right? So with that, I'll pass it on to Adrian to give his thoughts per se on this as well.
Yeah, thanks for that, Naysan. Hi everyone, my name is Adrian. I'm CEO and co-founder of MoneyMatch. And I completely echo what Naysan mentioned previously as well. I mean, we've hired so many people in the course of building this organization, this company. So many people have come, so many people have gone. And we start to realize that I think a couple of years ago, Naysan and I started to realize that we have to make a conscious effort to sort of add to the diversity of the organization. Because if we were to scale to where we needed to scale, I mean, technically we need proper representation. We need different ideas, we need different perspectives, etc., etc., etc. And being, as I say, it will be very easy to be a very male-dominated organization. It will be the simplest thing to do, right? Because to the amount of CVs that we get, almost 80% of them are male, right? I mean, for whatever reason, we don't know. Could be a function of that, they're more willing to try out the new industry, more willing to take the leap, etc., or whatnot. But we do make a conscious effort to hire women and females and to add to the diversity of our company. And the testament to that is I think most of our best and successful talents, present and past, have been women, right? They've contributed significantly to the organization, and we have no qualms putting a woman in a senior position in the company or a managerial position. It has almost never crossed our mind in regards to, she's a woman, she won't be able to manage. It's never actually crossed our mind, technically. We prefer diversity. We welcome it, and it's really helped us to scale, and it's a strategy I think we will continue to employ going forward as well.
Yeah, that's right. I mean, I can see that it makes good business sense for you as well. So that's great. I mean, thanks. I mean, that's a great start to this conversation. And I mean, I think Naysan, you touched on this already. Why don't you tell us a little bit more about MoneyMatch? I mean, we saw the video earlier. I mean, I think that's fantastic. 2.5 billion ringgit have passed through your fingers over the last few years. So maybe Adrian, as CEO, tell us a bit more about the company. I mean, because you're still small, right? It's a huge industry, right? The whole forex and remittance business is a huge industry. I think I saw some numbers, something like 26 billion outward flows just in last year. There's a Bank Negara statistics. So but you're still small, but you're already making a name. So why don't you tell us what you do, who you do it with, how you do it? But I think most importantly, I want to hear the why you do it.
Sure. Thanks for the question, Faraz. Very good question. I think that, well, primarily MoneyMatch was set up from the beginning to sort of offer SMEs and smaller organizations an alternative to the banks with regards to fulfilling their foreign exchange requirements, right? So Naysan and I come both from banking backgrounds, particularly in the global markets divisions. So we were well aware of a sort of P&L that the banks were sort of making off these SME customers, right? I mean, the P&Ls that were being transacted through vanilla FX was significant in nature. And that's just from a couple of banks that we've worked in, right? When you sum it up as an industry, the numbers are mind-boggling, right? Like you mentioned earlier, the numbers that you pulled out was 26 billion, I think, from Bank Negara sources. I think that's probably just retail remittance transactions. When you look at trade in general, I mean, when you talk about total addressable markets, the numbers are almost absurd, right? To think about it, right? Just, I think, if I'm not wrong, Malaysia and Singapore trade alone is north of 60 billion or something like that.
Wow.
I haven't looked at the numbers recently, but I think it's somewhere along that lines. And so trade is huge, right? So the total addressable market for opportunity is amazing. And like you roughly said, I think we are transacting closer to about 3 billion or more than 3 billion ringgit has passed our hands already, technically. And we're just barely touching the tip of the iceberg, right? We haven't really achieved the sort of scale where we think the potential of the company can fulfill technically as of yet. I mean, the market is so big, so many SMEs, trade is so significant, a significant part of the Malaysian economy. And we definitely have a lot more room to grow, right? I think if we manage to achieve our ambitions or fulfill our potential, we could be a very, very interesting company to be in the next couple of years, technically, right? If we manage to scale to the point at which we think that we can scale. And I think that the early parts of running the company were difficult because it's actually very hard to get people to, hey, I'm sending your money overseas for you, just wire 200,000 ringgit over to me and the money will be there in the next day or so, right? That was pretty hard going forward, right? So I think that almost impossible technically, right?
Yeah.
The amount of scams that were prevalent in the Malaysian economy. So I think we sort of crossed that hump already. The good part about trust that we always talk about is that trust is not something that can be built overnight, but it's also something that compounds. So technically that when you slowly build your trust, you sort of gain traction and you compound. So I think that we've passed that hurdle now. SMEs are very comfortable transacting with us. And I think over the next couple of years, you'll start to see the business grow a lot more, right? Because I mean, 3 billion in the scale of the total addressable market might be small, but it's still no small feat, right? In relation to the economy. So let's talk about why SMEs prefer us or choose us, right? So the interesting part about our business is that the requirement for foreign exchange transactions is not something new. While most startup companies and other fintech companies come out and create a new product or create a new service, I mean, our service has actually been as well as time immemorial, right? People have been buying from overseas, importing, and making forex FX payments for the longest time. So it was almost a zero-sum game technically when we came into the market. What we mean by this is that almost every FX transaction was facilitated by an existing facilitator. It could be a bank, financial institution, remittance player, etc., or whatnot. So basically, the 3 billion that we've processed through our books were technically flows that predominantly without the existence of MoneyMatch would have actually gone through the traditional banking system as it stands, right? Because to make a payment through MoneyMatch, you basically have to FPX the transactions through us. So we do have the data with regards to which bank sends money, which customers from which bank prefers us over their existing banks. Technically, that's the best way to put it, right? So what this means is that, let's say if a customer the SME wants to send money to, let's say China, for example, they would wire the ringgit through us via their existing bank. And let's say it could be bank ABC. So we could technically make the assumption that if we weren't around, the customer would have just gone to bank ABC and performed this transaction, right? So we do this for a lot of customers. So we're starting to see the real impact, and the customers are starting to see the real impact that it has on their cash flows and the savings that they have as well. Which then leads us to your next question as to why people use us. So the goal or the vision that Naysan and I had was basically to sort of bring treasury-like service and pricing that the larger corporates used to enjoy. Might not be a Petronas, I mean, slightly smaller than the Petronas boys, but a significant customer to the bank, straight down to basically the lower tier customers that the bank had. Because the banks tend to neglect a lot of the lower tier customers. I mean, they force you to walk to branches. A lot of services and preferences are sort of reserved for larger bank customers as well. So we thought there was a pocket here whereby, like, if you could bring this level of service and pricing down to the lower tier customers, we'll be able to gobble up quite a significant percentage of the market, which we are slowly nibbling and biting through. And I think that we found a decent product market fit already. So customers basically come to us because we're cheaper than the banks, we're faster than the banks, and we're a lot more convenient than the banks. And when they call us up, if there's an issue, they get to speak to a person quite immediately as well. So our customer service is one of the sectors that we invested in heavily as well, because we felt that it would give us a significant advantage over our competitors, which are the banks. So I think in a nutshell, that sort of wraps it up. I think I'll leave it to Naysan to see if there's anything else he wants to add.
No, I think basically, I think that like what we like to proudly say is that every cent, every ringgit of the over 3 billion ringgit that's gone through our books is basically a cost saving to the customer. No customer uses MoneyMatch because Adrian or me are good looking or our platform looks beautiful. No, we are genuinely cheaper and faster, right? So we always like to think it whereby like we're eating a little bit of the rice bowl a bit from the commercial banks over here. But end of the day, we are actually passing those cost savings directly back to the end customer. And any other future products that we do as well, future expansion will be revolving around that as well, making sure that it's actually cheaper, faster, better for the customer.
Actually, guys, I mean, there's so much I want to pick up on, just those two pieces. Let me try to do this, in a structured way. But also, I just, as an aside to all of our audience, our participants, I mean, this is a reminder. I'm sure you're very familiar with this already. You can send in your questions. Don't wait to the end. Send your questions in now using the Q&A button at the bottom of your screen. Of course, as I see this, I'll pick them up. Maybe they might coincide my own questions as well. I think, I can see questions coming through very quickly now already. So don't forget to send in your questions to Adrian and Naysan. I mean, one point first, as I said, there's so many things I want to pick up from that. And this isn't even going through my list of prepared questions, so I'm not sure whether we have time for this thing today. We'll try. We have 3 hours, right, guys? 3 hours, okay. So, no, just a joke. We will end on time. So, of course, Adrian, if you are giving wholesale rates, I mean, effectively that's what you're doing, right? I mean, you're not doing Petronas rates, but you're giving bank-like wholesale rates to your customers. Short question: how are you making money?
Great. I think that okay. So let me explain the economics behind it, right? I think something that to echo the point that Naysan was making earlier as well. You see, it's a very interesting trade-off that the customers were willing to make, right? I mean, existingly you were trading with a bank, which was extremely secure, right? Almost guaranteed, right? Nothing can go wrong with going to a bank. But they were willing to make the trade-off to come into a fintech startup where technically, I mean, so far nothing has gone wrong technically, significantly, but things can go wrong, right? It is a leap of faith, technically, somewhat. So the incentives for the customer to sort of port over has to be significant enough. Otherwise, it will not make the economic trade-off, right? And these are all business people, by the way. So they all make decisions make good decisions, right? Marginal decisions, basically everything that benefits them. So we understood this concept really early on. So the way we look at it is like the banks actually make a lot of money of these smaller customers, right? You're looking in the range of 1 to 1.5% on the total transactional amount, depending on the bank. We've seen some bank counter rates go all the way to 2 to 3% even, right? Wow. So you look at 100,000 ringgit transaction, and this is 3% from the interbank market. So you're looking at the customer potentially losing 3,000 ringgit on a 100K transaction. We don't like to use the term losing because it's more like 3,000 that they would not have gotten in the other way, because it's a cost-based kind of business model, right? And they wouldn't have access to the interbank markets technically anyway. So they don't have access to the FX pricing. They're stuck with one bank technically. So they only have to go back to the bank because all their money is stuck with the bank. You can't walk into a Maybank branch if you're, let's say, an RHB customer and say, hey, send money to this Maybank customer, I want to transact FX because I like the Maybank rate. It doesn't work that way, right? But you can with MoneyMatch. So technically, that's where we found our edge. And what we do is that whilst the bank make on average, let's say 1.5 to 2%, we sort of slash that down the middle. So we give the customer back half the savings. We sort of pocket the half as revenue, regardless, depending on the transaction size, depending on the size of the customer. Pretty flexible with our pricing. And then what happens then, we square the transaction with the bank or with our partners at the wholesale rate. Because we've gathered some momentum and skill, we technically have the ability to, we have pretty good customers to the bank technically. I would like to say it, right? I mean, the banks that support us, I mean, we have FX flows with them on the daily basis. Right? We're a constant buyer of dollars or foreign currency from them consistently. And therefore, we can also command a very tight spread from the banks, right? We have the ability and flexibility to choose which bank gives us the best rates. And that's sort of how the whole model works. Of course, there's a lot more technology behind it. I mean, we've spent time, I think Naysan sort of headed that project as well, sort of build algorithms that enable us to see the best pricing that we can get to scale our positions and the best pricing for our customers as well to remain competitive. So that's technically how we make our money. It's not fair to say we don't make any money at all, because that would be pretty scamish, right? Especially when you're sending money overseas. But we make less money compared to the banks because our infrastructure cost is much lower. We don't have a branch network, we don't have the legacy cost that is associated with traditional banking, and we choose to take these savings and pass it back down to the customer, as opposed to being the typical capitalist and absorbing everything. So it's technically a win-win for a customer if you're transacting with your current bank, right? And that's why customers port over. It comes back to the whole trade-off question as well. Right? Naysan, anything to add?
I mean, they're definitely very much in line per se. I think that it's important to just think of it with a simple concept of like Lazada versus like Mid Valley Mega Mall and Utama as well, right? So Lazada and Shopee obviously very minimal cost. And obviously, I think when it comes to banks, aside from the human resource and the big infrastructure costs in terms of like physical branches and offices, those takes away a lot of margins. And aside and above beyond that as well, technology cost is very high for banks. All major banks all use majority of the major vendors around the world and global vendors to build things up and whatnot. But for us, actually, our major benefit is that we are a technology company first, right? So since the year 2015, we've been ramping things up since 2017. We actually do all our engineering in-house. So we hire all local engineers over here, all local data scientists. Very thankful to the support we received from Cradle Fund, who supported the idea of having local engineers rather than just outsourcing everything out, right? So if you think about it, then we actually have a very low cost of technology base, a lot of human resource, a lot of human beings actually who have been coding it per se. We're able to move things really fast as well. We do have to go out to some vendor in Singapore or India or whatever it is. So all these things really make a very big impact that allow us then to run our business at a much lesser margins, but still not profitable, but still very much sustainable and sustainably able to offer these low rates.
Yeah. Okay. I mean, yes. Again, just more questions are coming in. And again, a reminder to the audience, please, this is just please do put in your name and your organization that you're from as well. I mean, this helps with us, as we're picking the questions to ask. So, I mean, a little bit about what you're saying, Adrian. I'm positioning you as like the Robin Hood of the FX and remittance business. You say helping the little guy, at the expense of big bad bank out there. So, but I mean, and actually, I want to rephrase a question that's been sent by one of our audience, Michelle Tan. And if I can turn this to you in the sense that, fine, Adrian, you mentioned trust, and Naysan, you talk about customer service being something that you've been focusing on as well. I mean, how do these come in together with, as what you say about customers are coming to you because of the savings? I mean, how long do you think that this cost advantage, the savings advantage, is going to last you as your business grows, as competition comes in? Because I'm sure you're not the only one who's saying cheaper and faster, right?
Yes.
So, how do you see this coming in? And as I said, picking on your as you mentioned, trust and customer service. How do you value this? How do you price this into your business?
Sure. So I'll take that first to start off. I think that yes, obviously there are many competitors, cheaper and faster. Technically, everybody is selling roughly the same story. But it's also not a static game. It is a dynamic, evolving game. It constantly changes on a month-to-month, and things grows and improves step by step, right? When MoneyMatch first launched in 2017, so did a Singaporean competitor called Instagram. They also launched as well. Today, you got TransferWise in Malaysia as well. So you got anybody and everybody you want, right? All the way from the old school Western Union, all the way to the brand new TransferWise, Air Wallets. They're all over here as well, right? And yet MoneyMatch continues to grow on month by month, right? So that's just a testament basically to our ability. So obviously we're not saying static, right? When we first started off launching out, you could say that, let's just say we price something at a certain currency pair, Malaysian ringgit to Singapore dollar, let's say 0.5%. Somebody comes in, they launch 0.4%, 0.3%. It all is an endless game per se. And yet it's been over 3-4 years. We consistently battle. We are consistently one of the cheapest corridors. And actually, we just use a lot of technology behind it per se. We operate out more and more corridors using the blockchain network. When we move money and funds over the blockchain network, we reduce the cost a lot. So for your guide, MoneyMatch is one of the first ever financial institutions to receive approvals from Bank Negara Malaysia to conduct cross-border payments over the blockchain network. There are 1 or 2 other banks as well doing that, but not many other players as well, right? So that's an example per se. And blockchain corridor networks, you don't open it up one shot for 80 over countries. You do it one by one and you improve things step by step as well, right? So the niche where we've had and we are still pursuing moving forward is very much on the business flows. So when you look at remittance corridors, right, people traditionally think of, oh, Indonesian corridor, Bangladeshi takas, Nepalese, for the Nepalese guards, and so these are the very common South Asian corridors that the vast majority of a lot of remittance providers do and target. But when it comes to business and B2B flows, it is completely different. It's very North Asia focused. So you see, we do a lot of Singapore, we do a lot of China, a lot of Hong Kong, Korea, and Taiwan as well. Singapore is a major trading port as another example as well. So these are examples whereby a majority of our corridors actually are not the same as compared to a traditional remittance shop handling India flows or Bangladeshi taka flows, right? So we actually are one of the best guys when it comes up to doing, let's just say, like China payments. We have abilities to do Alipay payouts. We have direct China bank accounts, so on and so forth. We can make CNH payments to Hong Kong. So that's an example per se of how in-depth our services are when it comes to business flows. But of course, if we want to send to, let's just say, like Bangladeshi taka, we're sending to the e-wallet over there. Sure, MoneyMatch is one of the cheapest, but that's also where the services stop, because it's just about how cheap it is to Bangladesh, right? But if you're sending, let's just say, invoice payment to China, it is very different. First of all, you got to upload the invoice. You got to make sure it's certified as well. We have Chinese-speaking staff to ensure that as well. We deal with 2 major China banks. I don't mind sharing with you guys as well. We deal with major local banks, also have China agency networks as well. We deal directly with Alipay. We have so many different options as well. We got bank accounts in Hong Kong to do CNH. So that's an example per se of how in-depth we are when it comes to handling B2B flows. Just one corridor as an example as well. We move money to Korea and Taiwan. Korea especially faster than anyone can in this country per se. We also have blockchain networks up to there as well. So these are all the examples per se where we choose to target and grow into, right? Because we find that the B2B corridors are something really, really interesting. Pre-pandemic, and hopefully now as well with the borders reopening up very soon, we were actually one of the bigger players when it came to travel flows as well, right? So imagine you're a large travel organization. If you use the majority of banks and all that, it's very, not so easy. The banks only have a counter rate for about like 10 to 15 currencies and all that. We do 40 plus, 80 over countries, right? So one shot, a guy can do payments for Umrah customers to Saudi Arabia. One shot, make a payment out to travel and do in Chile or Peru, right? So the depth of experience that MoneyMatch offers, and all these currencies are changing every 15 minutes. As compared to a bank who quotes 2 times a day. So it is a totally new set of institutional level pricing that even no remittance provider like TransferWise all provides. No, because they're all very much on the C2C side. So we actually find our niche and becoming very, very focused on the B2B side. Our platform is almost like a cross-border invoice payment platform, and then it was a lot of multilingual complexities involved there as well.
Wow, okay. But I mean, so a little bit on, your business has been growing, definitely. I mean, that's very clear. But how do you ensure? I mean, as you mentioned, even Adrian, how do you convey to your customers, to your clients, right, the concept of trust? As I say, maybe someone is willing to pay 1.5% because I know it's a bank.
Yeah.
Right, who is regulated by Bank Negara, for example, and if anything happens, I can always make a complaint, right? But why should I trust MoneyMatch? How secure are your? How secure?
I'll leave that to Adrian, and also as the CEO, obviously he looks, with the specs, and the good hair, he looks a lot more trustworthy. So I let the CEO to
trustworthy face,
Trustworthy face.
Not necessarily handsome, but trustworthy.
I won't say handsome. Trustworthy for sure. No, I think that's a good question. I think that to be frank, it was an uphill journey. I think that, and trust and the quality of service comes in hand, right? I mean, people will trust you if technically, firstly, we've been around for a while. It was an uphill battle for sure, but we kept grinding away. And I remember, as I mentioned earlier, that trust is not something you can scale quickly. You can't get there quickly, right? But it's also something that compounds. So technically, when a customer of ours has a good experience, meaning what we qualify as good experience, meaning they send money, the money reach safely, cheaply, satisfied, and service with a smile, and then they share their service with the rest of the other business partners, right? Or the other business associates from other industries that require the service as well. So then they come on as well. So a lot of our business is referral based, which is then a testament to our strength as well, right? We've come back to it. Like you mentioned earlier, what differentiates MoneyMatch from its competitors? And like Referee said, it's top quality service, trust, speed, alongside with everything else. It's a total package, right? And that total package somehow equates to trust. So we just hold true to basic principles, basic business principles that we believe in. And, we sort of start attracting other businesses that have the same form of ethics or that respect and want the same sort of like service as well. So, and this is sort of how we've scaled up thus far, and it seems to be a very viable and decent strategy, as opposed to just blasting marketing, keep spending money, being in the social media, being out there. I think that helps as well, but I think that the path that we decided to go on is a more sustainable path for us. And we have a lot of repeat customers as well, meaning people that come back once, people that use us once, almost, say with a high degree of certainty, 75% or more, comes back to us for the next one as well. So that's why you see the volume start to pick up as well, because everything compounds, right? When we get a customer, we don't just get a customer for that one transaction. We technically get a customer for their lifetime value, which could be as long as they're in business technically. We have customers that have been with us for 2 to 3 years already. And, sort of lifetime revenue that we've generated from the customer is pretty significant for any startup, technically, because I think startups live and die by their LTV, but the lifetime value that they can extract from the customer, right? So, yeah, so I think these are the couple, these coupled with, like I say, I have a trustworthy face as well. Sort of basically a secret ingredient that sort of lends to our trust as well. It's sort of credibility and sort of the trustworthiness of the company. I would like to thank all our customers as well. We've got small customers, we've got some pretty big customers as well, that any bank would welcome for sure. And this is a good myriad, good mix of customers that also proves to show that the strategy that we're adopting is scalable across the board. Yeah, so I think that's something that I think we're pretty proud of as well.
Yeah, that's good. Actually, you mentioned the word startup. That's the first time we've said that word in this last half hour, and it's amazing that yes, you are, by some definitions, you're still a startup, right? You started operations in 2017. We're not 5 years yet.
Yeah, we'll always be a startup, I think. Startup culture is a key competency, I would say, when competing against the banks. Having that startup mentality, that grinding mentality is
hunger.
The hunger is how we win most of the times.
Yeah. Wow. Okay. I want to talk about maybe that startup culture again later, but still, just to close off this point, I think what you mentioned earlier, I hope that answers the question sent in by Zainuddin Sohaimi. So Zainuddin, if you're listening, that should answer the question. Still on the whole risk management topic before we move on, I think I'll just take this question from Dato' Sharon from MIDF, the Group MD of MIDF. What are your views on central bank digital currency, CBDC? And Bank Negara have said that they're looking at this for international settlements together with central banks of Australia and Singapore. How would this affect what you're doing now?
Sure. I'll start off that first and I'll pass on to Adrian. I think that generally speaking, very positive for it. I think it's definitely the next way forward. But on the YC side, we don't see it negatively affecting us in any sense or manner, per se. It's actually positive for us, right? Giving a very simple example of blockchain. So as I mentioned, we're one of the first ever, basically financial institutions to actually do cross-border payment settlements over the blockchain. We partner with Ripple for that kind of settlement, per se. And basically what we identified then, Ripple is basically, long story short, a great replacement for SWIFT, right? So just I think as you can see that in various conversations out there by even MAS very recently yesterday, and even by Negara throughout the various conversations, you got to look at what's the end result you're looking at. So if the end result is moving money instantaneously, I think that there are already other certain cross-border FPX kind of do it now settlements already. There's with Thailand and Singapore already on the path. So how is CBDC going to make it better or faster? It's already instantaneous, right? But then there's so much more above and beyond just about the settlement aspect. There's the compliance aspect. There's the whole virtual settlements part about it as well. Governance, making sure that there's no fraud. And all these kind of things actually are what's rightfully so will slow down a transaction because you need a proper compliance check, make sure there's no AML or anything dodgy going through as well. So for us, then we just view whether it's blockchain or CBDC actually as a medium of technology or tool. Once it's regulated and approved by the regulators, we'll definitely be there hopping on board per se as a player per se. But fully because what we see is that the FX pricing, the compliance and speed of processing is all not relevant to the technology. It's all processes that's not about the CBDC or the blockchain. It's all about your compliance processes and whatnot as well. So yeah, it's something very positive. As more and more such technologies, it makes it it's good for very pro-tech people like us because we are very fast to go integrate into the systems as compared to some of the traditional players. So it's actually fairly positive for us. But yeah, I'll let Adrian touch about CBDC as well. I think because for our side, so we are licensed in quite a few countries, so we're actually in talks and quite aware of the CBDC upcoming regulations in quite a few different countries as well in Asia.
So that's I mean, sounds positive, but is there a downside to CBDC? I mean, would it give, let's say, Bank Negara more powers in freezing our money?
I'll let Adrian take that on.
Man, it's a good question though. About freezing your money, I think, well, I think that this goes back to the Constitution as well, right? I mean, whether the money is really yours to begin with in the first place, it's always up for debate, right? You know, I think if I'm not wrong, almost all money is owned by the central bank. If I'm not wrong. They just loan to us. If I'm not wrong, correct? I stand corrected. Principle.
Central bankers believe in, yes. All money is a
I think that is correct, right? Same with property as well. We claim we own the property, but I think actually the government owns all our property, right?
All property is trust. Yes.
In our trust of the government, etc. So, yeah. So I think in regards to that, obviously, then CBDC, of course, it will still be owned by Bank Negara. Every central bank issued currency is owned by the central bank, so therefore it will also have the same sort of legislation and powers over it as compared to fiat. But I think as Naysan rightfully pointed home, right, at the speed at which we are growing and the rate at which we are competing against, I don't think CBDC will be a threat to us. But that's not to say arrogantly. We are also, of course, exploring its premises and the technology internally as well. We're keeping a keen eye on it. And when I say keen eye, I mean that more keen than keen, so to speak.
Yes,
yeah.
Obviously.
We're very in tune with the technology, and we began discussions, of course, with relevant parties. But I think when push comes to shove, if it makes sense, it's not as if we don't have a religious stance to it in the sense that, oh, we will adopt it because it's CBDC, or we will not adopt it because it's CBDC. If it makes sense for the business, we'll be the first one to adopt it, right?
Okay.
So I think that puts us in a very, that kind of mindset and strategy puts us in a very good position, because I'm pretty sure that we will be either the first to adopt it, if it makes sense, or one of the first. Compared to the banks, of course, we'll be the first. So that puts us in a competitive advantage as well. So, I mean, if it's going to screw, let's say, us up, it will also affect the banks as well. But we will already be, because of the way we're structured, like say legacy infrastructure, the way we're set up internally as well, or engineering in-house, it would be a safe bet to assume that we will adopt it quicker than the banks. I'll dare bet significant money on that as well, right? I'll be surprised if a bank adopts it faster than us. Yeah. Really surprised, right? Because that would mean that there are some issues internally that we have to iron out. Yeah.
So on that point, again, back to you both, and as you mentioned earlier, that startup culture, the hunger and the agility you mentioned earlier, how are you going to manage this? Now picking a question from Amza Azhar, how do you manage a growing complexity as you're growing, right? And you're going to become cross-border and going to become, and dealing with more and more regulations rather than less, right? So how do you manage and maintain that startup culture?
Sure. Well, I guess it's definitely very, very difficult. I guess that the answer is balance, but it's also easier said than done. So actually, aside from just startup culture, this is not to like look down on older people per se, but obviously younger people usually very if they come and join a startup per se, they understand that it's not a corporate job or bank job per se. The thought process of when they join in, the expectations are very different. So we find that more the younger generation staff actually, when given the right chance, when given the right guidance, they can really perform over and above and beyond what you believe they can do, right? Basically. So with that being said, actually the vast majority of MoneyMatch staff is actually the younger generation. So we have probably like 90 plus staff at the moment. Across our offices mainly in Taman Tun, Bangsa, we got in Brunei as well, Penang and JB now as well. But about 70% of our entire population are actually between the ages of 22 until 28. So our actual average age range is something like 24 or so per se. A lot of youngsters, a lot of them fresh graduates, or they just come a few years out of university or so on and so forth. And this culture, this kind of camaraderie actually makes a very big difference, right? So we balance that by making more and more. Well, we don't make too many, but we try to make a few key senior hires. But about like 8-9 of us basically to manage out the complexity. So for example, between our C levels, we got a guy, who's a former regulator, is a former head of a division in a major bank, a foreign bank in Malaysia. We got another guy who's in a former treasury in Petronas, and so on and so forth. So our senior guys are all pretty experienced. They've done this actually, whether it's the banks or major Fortune 500 companies. And then we balance that out with a huge team of youngsters, right? So like, for example, let's look at our compliance team, let's say like 10 people. Only 2 will be like, managers, seniors per se under the boss. The rest of them all of them have below 3 to 5 years of working experience. We are literally training them up as we speak per se, right? And we find that when we are the ones doing that ground level training, we are in control of, the kind of attitude that they bring into it per se, right? Actually, maybe it sounds a bit bad, but sometimes when we hire like 2 senior bankers, they come with certain legacy attitude or legacy ways of thinking, as compared to the youngsters, we can just indoctrinate into them. And like, no, we don't take no for an answer. If the customer says this, you go out of our way. No, you're going to reply the WhatsApp at 10 p.m. at night. That's how it works over here per se. Yeah, so this is very different, and everybody kind of knows that. Or not, we will always say that, why are you coming and join a startup? Please go and join, some old government agency or something like that per se. Come here, you got to work harder per se, right? So we kept that very much upfront, and we find that the young people are very much up for the challenge. So that's how we do the balancing of seniors to handle the complexity, ex-bankers, ex-regulators, and a whole lot of juniors to do the hardcore work per se in compliance operations, business development, and whatnot.
So I mean, is it like a blue team, red team, or one team?
Actually, it's more like university campus team. It's like so many kids around. We almost sometimes feel like it's a mini uni campus, right? There's literally like a bunch of us, 8-10 of us who are parents, and there's so many kids. And because of that, a lot of them, like, they play badminton, they play futsal, it's just a very different ebb and feel to it. Right? Everybody's got nothing to do after work. They want to do sports, they go hiking together. Totally different feel to it.
I mean, thanks for the reminder. Sorry, Adrian, you were going to say something?
I just wanted to add to what Naysan mentioned.
Yes.
So I think I was just thinking about the composition of the question that was presented as well, right? I think that is, I can't say this for all startups, but I think that for ourselves in general, there's a big misconception that startup equals cowboy, right? Which is sort of where I think this question was sort of birthed from, or where the place where it comes from, right? So like, how can you be cowboy and scale technically, right? So I think that's maybe necessarily true for a lot of other startups, but I think the way we operate is like we are not cowboy. I think we're just better technically. In the sense that like we comply with all managerial requirements and all our regulators' requirements across the borders, as to that with any other financial entity would have to comply as well. There is no special treatment that is afforded to you because you're a fintech player, right? Still, punishment will still be pushed out if you for failure of compliance. But I just think that the way we're structured and the way we build ourselves is that we make changes and decisions faster than any bureaucratic entity, which is why we are better. And again, when the solutions are there, I mean, the institutions, the banks, they know how to make this. They know what needs to be done. They know what needs to be improved. It's just that putting pen to paper, getting it done, is very difficult in a structured bureaucratic organization because incentives may not be aligned. Whereas in a startup like ours, I mean, the incentives are aligned. So we're actually just making changes that the banks would want to make at a faster rate, which then you add it all together. So we're basically where the banks want to be in, let's say, 2 to 3 years from an operational standpoint.
Wow, okay. That's great. That's great. Question from Kate Locke. I mean, whether it's for her or for everyone here, what are the talents that MoneyMatch is looking for in respect of fields and skills?
Sure. I mean, we're actually pretty open about it. We're actually very much into attitude over aptitude. So we really care about attitude as well. I think like we both really believe that it's not rocket science. We're not asking you to create a whole freaking nuclear bomb was made up per se, right? Tons and tons of people have done remittance before. Tons of people will be doing remittance after. If you apply your brain power, you apply very good attitude towards it, you can then do it a lot more better than other people, right? So I think that just hopping on to that point as well that Adrian was making about like startup, right? Like, so I think people have this very bad impression about startup as a fun place to work. Right? And so on and so forth. I think that your pool table, and every day you have fun together. Maybe some startups like that, I guess. But Adrian and I don't believe that's how startups are run. When we look at the examples of the top world's best unicorns and all that, the startups actually is not a fun place to work. It's a very difficult and hard place to work. Everybody does very long hours, both in China and Silicon Valley. The great success stories of people like Ali in the early days as well. Shopee till today, you ask the people who work in Shopee, every time the 3-3-4-4, they work till midnight, right? So in actually the really big successful startups, people are just very hardworking, right? And people are paid pretty well. They are paid even though at such a young age, they can get a lot more than than you get at a corporate per se. There's no legacy bureaucratic structures per se. You can be a fresh grad, and after 3 years, you really prove yourself per se. You can really do a lot more better than 3 years in a bank, right? If you manager positions, you can go to a totally different field. That's an example as well. We have had examples of multiple different employees moving different departments within MoneyMatch as well. There's also a very conducive environment towards the youngsters. We've had people moving over from operations, compliance, business development, into the data science as well. You've got to pick up the relevant skills to code, but we even provide that kind of trainings. So these are all the different factors that make us very attractive to youngsters, right? To be very honest, whilst we are expanding out quite greatly, to answer the question about expansion as well, a lot of the on-the-ground development of the company actually is hiring more and more youngsters actually, right? We like to train them up and so on and so forth, right? And you don't really need to have a super skill, you study relevant degrees, whether it's accounting, legal, so on and so forth. All that is perfectly fine. Engineering that's fine. For the more senior ones, we honestly don't really hire very aggressively as well. I told you we hire very aggressively for the youngsters, very much holding back on the senior positions. Right now, I would guess that in line with how much we are expanding overseas, we are now actively even building up more and more positions in risk and compliance, for example, as well. We just hired a compliance officer in Singapore. We're now looking for another new senior person in risk and compliance here in Malaysia as well. So those are the kind of divisions whereby, not something you can train overnight. Risk, compliance, governance. So there are certain factors that we need to bring in, from other fintechs or larger fintechs or larger banks. But actually, 70% of hirings are very much the youngsters. And we try to be very conducive for them, move on different departments. And there's a very straightforward OKR, KPI kind of stuff process as well. A lot of games, a lot of sports as well. So more targeted at that, to be very honest. And we are expanding a lot. And a lot of the new jobs that we have, there's 15 new jobs, only maybe one will be a senior one in risk compliance. The rest actually are all juniors across every department, from business development down to engineering, down to everything.
I mean, I'm sure the CEOs and bosses on this call will all agree with you that attitude is the most important. The most important. But if you don't mind me, I want to embarrass you a bit because of this. I mean, something you mentioned in a previous call where you said that a degree in fintech is not necessary.
So I'll just clarify a bit. I think
comment on that. Yeah.
The term fintech is a bit too overblown these days. Just to be very honest, I think Adrian and I are maybe uncles in this industry. But when we first started in the year 2014, 2015, fintech was not a popular word at all. We were startups in financial services. We were looking at TransferWise in the year 2015 doing their Series C. They were not fintech, they were just startup in the financial services world, right? So that's also what we are doing as well. And till today, that's never changed. We are still a startup in financial services. I think that the word fintech is not correctly categorized. There are a lot of very large, successful financial technology firms. Let's look at Singapore Silver Lake, right? They are financial technology. They provide back-end services, financial tech to a lot of, but they're not a startup. They're public listed. They're worth. So that's actually where you get a lot of that misconception that comes into it. So that's why I said that nowadays we see more and more degrees, educational degrees in fintech. But I'm like, what is a degree in fintech? Because when I look at MoneyMatch, we are running here a pretty decent sized fintech here in Malaysia. we have nobody to do fintech, right? We got corporations, we got compliance, we got business development, engineering, data science. There's no division of fintech. So what do you study in the fintech? And what job are you going to apply for? If a person comes up to MoneyMatch and say, I got a degree in fintech, where do I place you? I guess business development, right? Compared to like, oh yeah, I got a degree in legal, I want to do compliance, and then there's still fintech, right? So it's a bit about, I think, a bit too generalist. And what is fintech, right?
Okay, actually, guys, I mean, we need to move to the next topic, unfortunately, which is really the future. And I'll take Intan Farhana's question here. Intan's from the Star. She asked, "What's next for MoneyMatch?"
So, Adrian, we go ahead.
Well, I mean, I think that we've amassed quite a significant amount of customers going forth as well, and we sort of like found our niche in the market, which is basically the SME market, which is something that we hold dear to our hearts, and we feel that that's where we really can add the most value. And I think that, so what's next for us is, I think the next couple of years is going to be very interesting for us, because I do see ourselves increasing our product footprint. I mean, as evident in the name, right? It's MoneyMatch, it's not Remittance Match or Transfer Match, etc. We do have ambitions of being a full-fledged financial service provider. What this technically means is that we want to offer more services to our customers apart from foreign exchange. And I think we were starting on a very strong foot, whereby customers really trust us with regards to handling hundreds and hundreds, even millions of ringgit. So it will be pretty easy, I think, for us to on-sell, to trust us with other products that their business would require as well. This could be the likes of insurance, company secretary requirements, etc., etc., whatnot. These are just some of the things that we're sort of like building in our lab, in our pipeline as well. So I do see ourselves being a multi-product company going forward. We're definitely looking to increase our footprint as well into other countries. I think that we recently got Hong Kong. We're looking to obtain Singapore soon as well, and other Southeast Asian regions as well. So this will give us a very strong regional footprint, which will then sort of assist our customers when they want to go regional as well. I mean, a lot of Malaysians want to export overseas, or it could be other countries, other regions that want to enter the Malaysian market, etc., whatnot. And I think last but not least, I think that you will start to see us venture into the enterprise side of things pretty soon as well. The first half of our business, or the first couple of years, were the painful years, whereby we raised a lot of capital, we invested a lot of capital into the infrastructure. We took time to build the infrastructure, which I think we underestimated how long it took to build infrastructure that of caliber that is acceptable by enterprise quality infrastructure, so to speak, right? And I think that it's clearly evident to us now by some of the customers that we've recently onboarded on the enterprise side that we are capable of competing with the world's best and acquiring some of the largest players in the world. So I think that we will be venturing into the enterprise segment pretty soon. So what this technically would mean is that you would like to be servicing the likes of, let's say, Airbnb, Disney Plus, Netflix, enterprise level kind of customers that require foreign exchange requirements. So I think that's basically our kind of roadmap for the next couple of years.
Yeah.
Anything to add, Naysan? Anything you think I missed out?
No, I mean, definitely so. So I think that the only thing I would add is that the pandemic definitely helped to evolve. I think we're trying to answer maybe 2 or 3 questions one side in terms of expansion and vision and mission, right? So vision and mission is rethinking finance. It's never changed, to answer that question, and it's still the same. But then leading on to that, the pandemic then made us change a little bit in terms of that micro strategy about how to actually get it done, right? So for example, like before the pandemic, raise funds, go overseas, right? Expand out, get more and more countries per se. And that's actually what TransferWise did. TransferWise is in so many different countries, 20 plus different countries, licenses everywhere, and they operate their own model wherever they go, right? But the pandemic obviously changed the course of that. I think very easily to put it is that like we were talking to a big global VC and they kind of asked us that, okay, you guys are going more of the Gojek versus the Grab path, right? So the Gojek is being multi-service, very deep, within Indonesia, for example, versus Grab being in many, many different countries per se, and having to incentivize drivers non-stop just to survive, right? Versus a Gojek per se, super deep into one country. People just very reliant. You get a massage, a hair, food, everything is Gojek per se, or go-to, whatever they call themselves now, right? So that's a bit of the thought process. So because of the pandemic, obviously, Adrian and I can be traveling around, getting new licenses left, right, and center. But as we're growing in Malaysia, we found that, hey, first of all, as you rightfully mentioned at the start, 3 billion ringgit is still very small. The trade industry is trillion, right? And then you break down into like the percentage of the total trade that goes into the small and medium, you're talking about hundreds of billions, right? So we're still very, very small out of that from that perspective. Then we realized that, oh wow, we need to get a lot more deeper. There are a lot more other relevant financial products like SME related insurances. So not about your motor car, but more about employee benefits and fire and theft, which are done totally manual, totally traditional, very easy for us to totally digitize that as well, working with major insurers like Allianz and Prudential, BSN and so on and so forth, offering up this kind of services to our customers. So getting more Gojek-like for SMEs and B2B customers in Malaysia is very much our plans.
So, I mean, I see it's quite clear from what both of you are saying. It's good that both of you are saying the same things. It's not so much that you'll be breaking into the space of digital banks, but you're more of providing services to the market, which in this case is particularly SME.
Yeah, in fact, we see digital banks as potential partners as well, right? Leveraging off our corridors and rails. So.
Yeah. So, I mean, and I think as I said, we really need 3 hours for this because we haven't even started about football. We haven't started about football yet, but okay. Again, trying to pick up a couple of questions from the list here. Would you be open to an acquisition by a bank?
Adrian, whether you go ahead and answer that.
If yes, at what price?
Oh, what price?
I think that
we've got the Star on here, and I think a few other media outlets.
Well, I think this is a very interesting question. Loaded, of course, as with all MIDF conversation questions are. But I think that we can never rule anything out, right? I mean, in this day and age, I think that the way we work with banks is very synergistic in nature. I mean, obviously, we understood this by obviously being in business for so long as well, is that we are not in competition with all the banks. We are in competition with the top 3 banks. All right, I'll just lay it out here. For whatever reason, let's not mention names, right? Let's call Yellow Bank, Red Bank, whatever bank, right? You look at MoneyMatch as an aggregator of transactions, meaning we take transactions from, let's say, disgruntled customers from the 1, 2, 3 banks, and we flow them to the smaller banks that appreciate sort of the FX flow, so to speak. So it would not make sense. Obviously, it would be nice to be acquired by a large bank, but it would be more synergistic for, let's say, a not so large bank to acquire us, that they can up their FX capabilities.
Yes.
And then they can also acquire the customers that from the 1, 2, 3 banks, which they didn't have already, and marry the whole proposition. But whilst it would be awesome, I wouldn't say no to it. Of course, it's obviously an idea we entertain. But I must say that banks in Malaysia are not that aggressive technically to this point in time, right? I think they've been a bit of a sleepy mode, and maybe they're sort of waking up to it now. But I mean, you look at it, I mean, we've sort of peeled 3 billion ringgit away, and I don't see them waking up anytime soon as well, technically per se. So it's a very interesting proposition. It's a very interesting question, because it's like, even if we don't get acquired by the bank, like, I don't think they'll do anything to stop us from stealing away their customers.
Maybe they can't really, to a certain extent.
We go back to this whole bureaucratic structure, right?
Sure, as you said, too slow.
Exactly, when it goes to the board will be like, oh, we lost how much? 1 billion ringgit today, this year, quarter in FX volume. No big deal, let's issue some more loans, etc., etc. Yeah. So it's a very strange market. Like, we thought the competition would be fiercer, to be honest with you. It's almost like, yeah, I don't know how to put it. It's almost like they're in a boxing ring and they're tied, their hands are tied. We just do what we want at our pace. And we just keep acquiring customers and we just keep growing. And I think hopefully to the point where we're big enough to either go for maybe a public listing, or to the point where the bank starts to wake up and decide, okay, maybe we need to take these guys more seriously and look into acquisition. We'll entertain it for sure. But I'm just saying that we haven't had any inkling of it.
I'm sure the market theorists will say that the whole financial intermediation space has many roles and they play certain roles in which people are happy to pay 1.5%, for example. But you are coming in, carving out a niche. I say you're not taking over their space. You're carving out a niche and maybe playing that market leveler role. I think, which you say, a little bit of the Robin Hood thing.
That's precisely the point. The banks, so that the banks can focus more on deposit taking, which is their primary core function, and lending and whatnot, and then we can handle the rest technically.
Just touching on M&A as well, I think that certainly we are open to banks and all that, but honestly, we've been in quite a few conversations, and it's usually from large foreign tech players kind of a situation per se, with the amount of licenses that we have as well as our customer base. I wouldn't name names, but you can immediately see other larger players, global players will be like, yeah, this guy's here in Malaysia, Panama, one shot, and we get this customer base and all that. So I would say that the likelihood of that is probably a bit higher. We already are in quite a few as well, but we don't actually see the banks as aggressive like that, right? So actually, it's more of the other large world global fintechs actually which are interested in us.
Oh, that's great. And guys, I'm just saying, I think I'm getting the 5 minutes card.
Oh, okay.
So no, really. So maybe let's before that, I also just need to add this disclaimer that MIDF is not one of the sleepy banks. I think that's
for sure. Otherwise, we wouldn't be here, right?
Yeah, exactly.
Thank you. Okay, so maybe a last question then. And I'll save the Ukraine question and the football questions to the next time you join us. For today, gentlemen, what is your wish list? What would you like to see, whether from the regulators, from your partners, from customers, from the market? What's your wish list?
I'll start off first with a couple before I pass on to Adrian. Right? I think that our relationship with the regulators has been both good and smooth. As I told you, we were part of the sandbox, working with the regulators hand in hand for EKYC. There's no issue for us on that sense, right? To be very honest with you. If Malaysia didn't have a fintech sandbox and all those things, then that would be a problem. But what more do you want? They're already doing the fintech sandbox. They're already giving out fintech licenses and whatnot as well, right? I would say it's actually more from the funding scene here in Malaysia, something that also once answering the question on the hurdles that as a startup can face to grow our business here in Malaysia, right? A lot of big foreign money don't really rate Malaysia highly. They always prefer Indonesia or Vietnam. Larger population, single language, yada, 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 right? So generally for big short foreign investors, they see Malaysia as an afterthought. That is a bit hurtful to us, even though we know for a fact how big here Malaysia is, a population, and 35 million, and the opportunities for us here to make billions of ringgit per se, right? But that is something that the relevant facts of the matter is. But even though this is, this is roughly the same in a lot of different ASEAN countries, I guess you can see either the market or the industry or the government getting very, very active in terms of helping to fund small businesses or startups to get into this whole scene per se, right? So MoneyMatch, we were very grateful that we actually got some funding from Cradle very early on, which is the whole purpose of Cradle funds to do this as well. But there is quite a big, gap after that as well. As we're raising more and more funds, I think we find it fairly difficult to get foreign VCs interested in Malaysia per se, especially with the pandemic, financial services. So I think there's a lot more that can be done. I think major corporates, even major banks, to set aside proper fintech funds as well, things to innovate and grow this sector. And we don't see it. We see a few major banks having like collaborations and whatnot. That's not really useful, right? You got to have proper funding per se. We all need our millions of ringgit to develop technology. Engineers don't come cheap. So I would say that the major hurdle is actually more on the lack of local funding when it comes to the fintech scene as well, right? Us fintechs always have to rely on foreign VCs or large, angel investors or investment banks. We recently closed a round as well with another investment bank as well. So, those kind of guys understand and accept what we are doing, financial services. But aside from that, we don't really see anything else. We don't see any large corporate ventures coming into the fintech scene as well. We don't see any bank venture firms and all that. So I think that's something that needs to be improved if we want to see more and more future money matches in different sectors, right? Insurances or so on and so forth. That's not enough. that for me is quite clear, unfortunately.
Sure, I think maybe that's why we've not seen a unicorn coming out of Malaysia.
Yeah, it's not easy, man. Yeah.
Right.
Adrian.
Funding. Yeah. Adrian, your wish list.
Oh yeah, I think echo what Naysan said. Regulators have been nothing short of amazing. I think they get a lot of stick for no particular reason. I mean, they're doing their job. I mean, the regulators, right?
Yeah, the regulators. Yeah.
Right, you know what I mean? Just
they cannot be signing off
comply,
everything, right? Like it doesn't make sense. Yeah.
There's an open enough relationship where they're willing to listen, and you also have to be like understanding as to what their role is in the financial industry, right?
Yeah.
And I think they're pretty awesome, so there's no issues there. I think, like Naysan said, from the funding perspective, the local guys, I think that we've seen some crazy things for sure, like local players, local investors actually preferring to invest overseas, like Indonesian unicorns and stuff like that as well, as opposed to local homegrown talents. I mean, it's not that we're doing poorly, you know what I mean? We are scaling, and I think that, we've been resisting attempts for foreign money as well. I mean, there has always been the allure of taking foreign investment and then having to move to Singapore.
Yes.
Been Thomas out there as well. We've been quite hell-bent on being a Malaysian born company, right? And riding through the benefits, the pros and cons of doing that, for sure. So definitely, I think participation from local institutions with regards to fintech funding will be amazing, because I think that, like I said, it's not like we're doing poorly. I mean, you're investing in the future, and I think that it's also critical for us that these investments actually create jobs, right? And culture and talent that we build, we have the ability, we have the talent in Malaysia. Personally, in MoneyMatch as well, we are hiring people like from Ivy League, top schools in the UK that prefer to work in Malaysia as opposed to going to Singapore. They just lack the avenue, right? They just lack, I mean, this doesn't make sense for them after going around and, oh, there's nothing here for me, I want to go to Singapore. So there's a lot of talent in Malaysia, right? I dare say that talent is abundant here. All we are lacking is basically a local institutional support, and I think that we could actually build something pretty amazing. Yeah, that is quite ridiculous to say that Singaporeans are better than Malaysians or Indian or whatnot. I think Malaysians are one of the most talented people in the region already. They speak so many languages, the flexibility of thought, pretty good and pretty versatile. I mean, we personally find a lot of talent in Malaysia. And local talent here to be, hard to find for sure. They're somewhere out there, you know, they're sleeping somewhere out there. But when you do find them, I think there's a lot of local talent, and I think testament to the team as well. Everything that we've built comes from the talent that we've acquired, comes from the team that we have as well. So I think that basically would be both our wish lists as well. I think everything else is fine, but we definitely would love some more local participation from local investors. Towards building, the infrastructure for finance for the future as well.
Okay, that's good. So I think with that, we are just by the time that we have to end. I want to thank you, Adrian, CEO of MoneyMatch, Naysan, co-founder of MoneyMatch. I think thank you for being so open and frank with us and telling us about all of your stories and issues. And I hope the participants have had a great time. You can see from the questions that are coming in. I'm sure they'll still be coming in. Just a note that a recording of this conversation will be made available after this, so that we can replay this 1,000 times in the middle of the night. But again, thank you once again, Adrian and Naysan. I hope really we'll be seeing each other very soon in person as well. Thank you, everyone.
Thank you very much.
Okay.
Thanks, everyone.
Bye-bye.